Today we will understand money aggregates. Let's know some key terms. Money supply means the total amount of money in an economy. Liquidity means how easily it can be converted to money, like cash have high liquidity and gold have low liquidity. Demand drafts means the money people keep in savings account. Currency in circulation is money which is with public, physical cash, and banks own money, profit. Deposits with RBI means banks deposit with RBI and others deposits with RBI. Monetary aggregates can be divided into three types: reserve money, M0, narrow money, M1, M2, and broad money, M3, M4. RBI measures the money supply through these indicators. Reserve money, M0 is equals to currency in circulation and deposits with RBI. It is also known as high-powered money and is a monetary base of an economy. Narrow money, M1 is equals to money with public cash, with public savings money in banks, demand drafts, and others deposit with RBI. Narrow money is equals to M1 and money in post office savings account. And can easily convert to money, so it is called narrow money. Now, broad money, M3 is equals to M1 and short-term deposits of residents with banks. Broad money M4 equals with long-term deposits of residents with banks and demand deposits with post office. Thank you for watching. Don't forget to like and comment for more of such videos.